Hi, I'm Paul Cavey from East Asia Econ. I run a research service looking at the economies, the big economies of East Asia, so China, Japan, Korea, and Taiwan. Now, obviously, for all of these economies, it's in a very important time right now because of the impact of tariffs. And you would have seen on Liberation Day that Asia was chosen really for special treatment from the tariffs, with very high tariffs really hitting across the region. And I'm going to talk today about that and what the implication of that is for these economies. Now, to start with that, it's important to understand there's a huge amount of uncertainty because it's going to depend where the tariffs are and what level they're going to be. And obviously what we've had over the course of the last few weeks from the US administration is an announcement of very high tariffs and then some pullback from that and a postponement of when the tariffs are going to be introduced. Now, there are supposed to be new tariffs arriving, with the sectoral tariffs on semiconductors still to be announced. So there's still a threat of things coming down the road. And ultimately, President Trump has said that tariffs are going to be happening and the reciprocal tariffs will happen. So there's a huge amount of uncertainty. So what I wanted to do today is really set the scene in terms of how the economies are faring in the run-up to tariffs happening. So whatever the level of tariffs were going to happen is going to depend the ability of the economies to withstand those and to think about where are good investments in those economies and in those markets when the tariffs hit. One of the things that's going to decide that is how strong the economies are today. And so what I was going to do is look at the four economies and think about where they are sort of ranked or where they are relative to each other in terms of where we stand right now. And if I think about the economies right now, I think it's still clearest that Taiwan is the strongest in the region cyclically. So the export data over the course of the last few months have been remarkably high. Now, some of that will be front loading before the tariffs are hitting, although, you would expect to see that in some of the other economies as well. And in Korea, that's really not visible at all. And what you are seeing in Taiwan is counter-cyclical behavior of the economies or desynchronized behavior of the economy is continuing. So during COVID, usually what happens in Taiwan and Korea as well is that a lot of domestic demand is quite highly correlated with exports. So exports do well, the domestic economy tends to rise as well, people have more money, they tend to go out and spend, restaurant spending goes up and so on. So private consumption and exports tend to move together. What we've seen in all of the economy since COVID is that synchronization of the economy has been thrown off course. And so what you saw in Taiwan, and to some extent in Korea, but certainly in Taiwan in 2024, is that exports were doing better and private consumption was weakening. And that trend is certainly continuing this year. So more than ever, Taiwan right now is dependent on the export sector being strong. But because the export sector has been strong, Taiwan's economy is looking quite good. And that's reflected in wage growth being a bit higher than it has been before. Inflation is starting to come down a little bit, but the economy does look quite robust. The second economy in terms of where we stand in terms of robustness or cyclicality, I think, is Japan. And before the tariffs in particular, Japan looks like it was a really interesting spot. And there was a few things that stand out. So first is that the economy is being led by services. So the manufacturing sector hasn't been doing very well and won't do very well because of tariffs. But really, that's been the case over the course of the last 6 to 9 months. The economy has been doing relatively well because of services. So it's a very unusual cycle in Japan because it is so particularly led by services in a way that hasn't happened before. So that's one feature of Japan's economy today. The second thing in terms of the data that we've been seeing is this broadening of inflation that's been happening. So core inflation has actually picked up once again and is above 3%. So inflation is not low in Japan at the moment. But the interesting aspect of inflation is how much it's broadening out. So previously, during the pandemic and the initial rise in inflation, it was all because the yen was weak and import prices were rising, pushing up the costs of goods domestically. What's happening now is core inflation is rising a bit more, and core inflation is also becoming broader. So in particular, in the course of the last few months or so, rents have started to rise within the CPI. And that's a very important development in Japan because rents are about 20% of the overall index. And for the course of the last 20 years or so, rents didn't move at all. So for the BOJ to reach its 2% inflation target and for inflation to remain sustainably strong in Japan, it's very important that rentals do start to rise. And that now is being seen in the data, particularly in terms of the Tokyo numbers. So a couple of things that stand out in Japan: the services sector is stronger and leading the cycle, and second, core inflation is broadening and becoming stronger. The third thing that's important in Japan is wage growth. And the data, like the official data don't come out, official data are a bit lagging, but in some of the private sector indicators for the labor market, part-time wage growth in March was very strong. So one indicator suggesting that part-time hourly wages are rising by about 5.5% year on year. Really, that hasn't been seen for years in Japan. And that matters for a couple of reasons. One, because it's higher than inflation. So you have part-time workers now getting real wages growing for the first time in a few years. And the second thing is because that is an important indication of the overall labor market. So unlike regular workers or full-time workers, part-time workers tend to be more at the coal edge, if you like, right? Like they're less protected. And so the dynamics of the labor market hit part-time workers much more closely than they hit overall workers. And so the fact that part-time wages are increasing by 5.5% is an important indication of the labor market. So thinking about the two economies which look strongest in terms of some of these nominal demand drivers, Taiwan is probably first and Japan is second. Now then there's two other economies I look at, like China and Korea. And I think within those, cyclically, Korea actually looks the weakest right now. And that can be seen in a variety of ways. So unlike Taiwan, there wasn't any recovery in private consumption over the course of the last 2 years. And private consumption now in Korea is as weak as it was back in 2019. At the same time, there isn't a recovery in exports in Korea in the same way that's been happening in Taiwan. And a lot of that is reflects the difficulties at Samsung in keeping up with TSMC and the AR trends that are happening. And so Taiwan's exports are doing very well. Korea's exports haven't been showing that same dynamism at all. So there's sort of two problems going on. The domestic economy is weaker and the export sector is not doing so well either. At the same time, there's obviously all of this political instability that continues to go on in Korea. And so there is now a presidential election in early June. And when you look at the business sentiment numbers in Korea, actually, they've rarely been weaker. So I think it's underappreciated just how weak and how poor Korea's cycle has been doing over the course of the last year or so. And so relative to these other economies, Korea does look very weak. And then the final economy I look at is China. And China is obviously the biggest economy in the region, by far the most important economy globally in the region. And in China, I think it's there's been a lot of talk and a lot of discussion, which I think is reasonable, that China is well prepared for this second trade war. That China's been preparing for this moment over the course of the last 6 to 8 years or so. It's not particularly unexpected in China what's happening. And in fact, given Xi Jinping's worldview of this famous phrase that's talked about a lot, changes unseen in 100 years, like if that's the worldview that China has, it would seem it's very well prepared for the things that are happening today. But I think while that's true politically, I'm much less sure that that's true economically. And the economy is quite weak in China. So even again, before the tariff hit really began, the PMI is still only around 50. Domestic demand hasn't been particularly strong. And what we saw in the PMIs released for April, which begin to show the impact of the tariffs that might be seen, export orders fell quite sharply. And that, I think, is just the beginning, right? Like the fact that US tariffs on Chinese exports are so ridiculously high. This is by far the biggest shock, negative economic shock that China has seen since the initial wave of COVID back in sort of 2000, 2001. So I don't think China's economy is well prepared for that. Politically, it might be. Economically, I'm much less sure about that. And so right now, China's economy has looked somewhat stable because the construction sector looks like it's beginning to bottom out after all of the problems in the property market since the 3 red lines in 2021. But the export sector, I think, is more likely to take another leg down, and therefore China's cycle looks weaker. So where does that leave us from here? Well, obviously, a lot is going to depend on what happens with tariffs. Like if tariffs remain at over 100% on China, if as being rumored, there's large tariffs are going to be imposed on semiconductors over the course of the next few months, if the reciprocal tariffs, or if the auto tariffs remain at 25%, if all of these things remain true, then I think there's a lot more downside to exports from here. And even in economies like Taiwan, which have been doing so well, that's going to matter a great deal for the outlook over the course of the next few months. And so tariffs remain the big issue, I think, in the region. And it's very difficult to be optimistic about the economies given the threat of tariffs that exist. And I think as long as the threat of tariffs remains on the table and particularly tariffs at double-digit rates, it's more likely we see an export recession, which means that the region looks very weak. In that, again, I think when we think about the ranking of the economies, Japan and Taiwan will still be relatively resilient compared with Korea and China, which look much weaker. Now, obviously, that then begs the question, what are governments going to do about that? They're unlikely just to sit still and watch tariffs go up and do nothing. And there's obviously two things there to be thinking about. One is, what's the policy response relative to the US? Is there something that they can offer the US to have tariffs coming down? Now, maybe we're seeing that in Taiwan with this strength in the Taiwan dollar over the course of the last few days. Maybe that is something that is seen as a quid pro quo for tariffs coming down. That, I think, is sort of an assumption that can be made. I think it is worrying that when the first country to be talking to the US is Japan, and in the most recent negotiations with the US, it was reported that the US wasn't willing to put the auto tariffs on the table, and auto tariffs were the main thing that the Japanese side wanted to discuss. So I think it kind of speaks at the difficulties of reaching a negotiation on tariffs. But it's a bit unclear what the US side wants, and it's difficult for the Asian economies to offer a lot more because of the domestic political constituencies and considerations they have at home. So one aspect of thinking about, what the policy response is how they negotiate with the US. And again, part of that is, what does the US want? The second thing is then what these economies can do domestically. And I think the important thing here is all about fiscal policy. And fiscal policy obviously needs two things. One, you need to have the fiscal ability to be able to issue fiscal policy. And the second thing, you need to have political support to be able to do that. Now, the politics around the region is pretty ugly. So in Taiwan, the parliament, the legislature is very divided. In Korea, it's probably even worse that the parties have managed to agree now on a supplementary budget. But the supplementary budget is still smaller than the supplementary budget that the central governor was requesting just a few months ago. And since that request was made, the economy has deteriorated even more. So it's difficult for for fiscal policy to happen very much. In Japan, it's also unlikely that the government doesn't have a strong majority, but it does seem the opposition parties are much more willing to push through fiscal stimulus. So some of that's likely to happen. In China, the government has been steadily pushing out more easier policy, but there's still a lack of, it seems to me, a lack of urgency or a lack of willingness to really do something to help the household sector and the consumer sector. So the fiscal policy that we're seeing still feels like it's more incremental, and it still feels it's more focused on manufacturing sector in particular rather than the household sector. If that starts to change, and there's more focus on the household sector, then I think it could be a big deal for China's economy. But I still don't have a lot of conviction that that's going to happen over the course of the next few months. So I think from here, the economies, it's all a bit of a muddle through, I think, over the course of the next few months, waiting to see what happens with tariffs. But it's very easy to see, for example, interest rates continuing to fall in China and Korea in particular, where the cycles are still relatively weak, inflation is quite low, and the tariff impact for these economies is going to be quite large. Now, again, all of these economies, I do a lot of work on looking at the data that's coming out every day, as also doing thematic and structural research. If you're interested in finding out more, please look at the website, eastasiaecon.com, where you can see a lot more research, a lot more charts, and all of the data that we cover. Thank you very much for watching.